Here are the crypto top headlines covered in this video. Ripple to add smart contracts to XRP ledger. Next, Bitcoin headed for breakout or breakdown. Analysts weigh in. Also, Ripple lawyer slams SEC use of crypto asset security. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple to add smart contracts to XRP ledger. The move aims to attract developers and expand XRP ledger's capabilities, bringing new use cases to its ecosystem. Cross-border payments company Ripple announced that it will add smart contracts to the XRP ledger, or XRPL, developer ecosystem. Ripple announced that the move would open various use cases for users, builders, and entrepreneurs. It aims to attract developers to use XRPL's expanded capabilities. According to Ripple, the smart contracts feature is set to go live in the coming months in the XRPL Ethereum Virtual Machine, or EVM, sidechain. In addition, Ripple said that smart contracts would also be available on the XRPL mainnet. However, the cross-border solutions firm said it's still in its research phase and did not provide a definite time frame for deployment. Collaborating with DeFi developers, smart contracts are self-executing contracts stored on the blockchain. They automatically progress when specific conditions are met. Smart contracts are programs that handle transactions and agreements without the need for intermediaries. Smart contracts have various use cases and potential applications ranging from decentralized finance, or DeFi, to supply chains. It's being used to develop decentralized applications, or dApps, on popular blockchain platforms like Ethereum, BNB Chain, Avalanche, and Solana. Ripple said they are eager to collaborate with DeFi developers and want community members to provide input on design specifics. The organization invited programmers familiar with EVM languages to explore possibilities on its sidechain. Ripple also said the sidechain was created for developers using Ethereum-based smart contracts. This gives a familiar environment for deploying dApps, allowing them to use Solidity, a programming language used to build smart contracts on Ethereum, bringing EVM compatibility to XRP. According to Ripple, smart contracts will enter the XRPL ecosystem through the sidechain they developed with the blockchain firm Parasys. The company believes that the new development would help the blockchain appeal to more developers. Ripple wrote, "This sidechain will bring Ethereum Virtual Machine, or EVM, capability to the XRP community, allowing developers to employ familiar tools and programming languages, thereby broadening the XRP ledger's appeal to a global developer community." The company also added that the momentum for increasing the programmability of XRPL will further accelerate in 2025 as the organization continues to progress with its goal of adding smart contracts to the mainnet. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin headed for breakout or breakdown. Analysts weigh in. Analysts say upcoming rate cuts could be a boon for Bitcoin price, but the market is still in wait-and-see mode. Crypto analysts are predicting three major events in the coming weeks that could drive up the price of Bitcoin. For the last 7 months, Bitcoin is traded in a downtrend between $74,000 and $52,000, and investors have grown increasingly restless about whether or not BTC will break out to the upside or continue to grind lower. Market in wait-and-see mode. CoinStash co-founder Mina Thoradura told Cointelegraph that the next major move for Bitcoin will hinge on how the market responds to upcoming political and regulatory shifts in the United States during election season, as well as upcoming macroeconomic data. Whether it's a breakout or a dip will likely depend on the next major piece of news or market shift. For now, the market seems to be in a bit of a wait-and-see mode. Interest rates and jobs data. eToro market analyst Josh Gilbert told Cointelegraph that he's looking to the upcoming Federal Open Market Committee meeting on September 18th as the next big catalyst for Bitcoin price action. The consensus among market participants is that United States Federal Reserve Chair Jerome Powell will cut interest rates by up to 0.525%, something Gilbert says is a major positive for risk assets like Bitcoin. The bottom line is that a rate cut is coming, but the focus is now on the size of that cut. U.S. jobs data this week will be a key driver of the expectation and could see a move in crypto assets, Gilbert said. Coinstash CEO Tina Wang told Cointelegraph that investors should keep an eye on upcoming U.S. employment data, which is set to be released on September 6th. The July unemployment rate came in higher than expected, raising concerns about a possible recession. The unemployment rate is famously known as a double-edged sword. On one hand, a higher than expected rate could signal a greater chance of recession, which isn't great news, she said. On the other hand, it could actually be positive for the market because it might give the Fed more reason to cut interest rates, Wang added. Breaking cluster of resistance. In a September 3rd investment note viewed by Cointelegraph, IG Markets analyst Tony Sycamore said Bitcoin will need a sustained break above the most recent $65,000 high to cement a proper reversal. If Bitcoin can break above this level, Sycamore says the asset will face a cluster of resistance between $70,000 and $74,000 before the market can flip to a positive bias. Bitcoin is currently trading at $59,140, a 40% increase since January 1st. At the time of publication, BTC remains down 20% from its all-time high of $73,800, which it hit on March 14th, according to TradingView data. In the midterm, Gilbert said investors should prepare for further volatility in September. Historically, September is the worst month for Bitcoin price action, with an average monthly return of negative 4.3% in the 11 years since 2013. Global growth remains robust. U.S. GDP was revised higher last week. U.S. earnings growth reached double digits in Q2, and a rate cut all signal that the market has further legs. Yes, there are big risk events ahead, but there is reason to be positive, Gilbert added. Our next top headline, Ripple lawyer slams SEC use of crypto asset security. Ripple's chief legal officer, Stuart Alderoty, says the term is fabricated with no legal basis. Ripple Labs' chief legal officer has taken aim at the United States Securities and Exchange Commission repeated use of the phrase crypto asset security, arguing it is a fabricated term with no legal grounding. In a recent August 30th filing, the SEC warned it could challenge any plan by defunct crypto exchange FTX to use stablecoins in repaying creditors, with the regulator noting its portfolio has crypto asset securities. Ripple's top lawyer, Stuart Alderoty, argues the SEC is trying to deceive judges by using the term. The term crypto asset security is nowhere to be found in any statute. It's a fabricated term with no legal basis, he said in an X post on September 2nd. The SEC needs to stop trying to deceive judges by using it. In an August update to the SEC's legal battle with crypto exchange Kraken, the federal court for the Northern District of California also took issue with the term, saying the crypto asset security concept is unclear at best and confusing at worst. SEC once ruled Art Gallery wasn't selling unregistered securities. In an August 29th X post, Alderoty also took aim at the regulator's Wells notice to NFT marketplace OpenSea, which claims the tokens being sold on the platform might be unregistered securities. According to Alderati, the agency already made a ruling in similar circumstances over 40 years ago when they decided an art gallery didn't need to register with the SEC even if buyers had investment motives when purchasing art. In a letter shared by Alderati, a gallery, the Art Appraisers of America, acting on behalf of an artist, Willie Nelson, was asking for clarification around whether the selling of lithographs, print drawings, would violate laws against selling unregistered securities. The gallery was concerned because collectors could buy them as investments and, in theory, sell them after they increased in value down the track. In this case, the SEC decided not to proceed with enforcement actions. In 1976, the SEC ruled that art galleries, even when promoting and selling to buyers that had investment motives, didn't need to register with the SEC, Alderati said. However, the letter did note that the decision could change if the gallery made false declarations about the art sale, or if the SEC were to find different facts or conditions, it might require a different conclusion. It also declared the decision was not a legal conclusion on the question presented, only a specific ruling in this situation. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.